The key things to note here are that we are about to cross a major de-risking milestone for the business. The business is attractively priced relative to its peers, and it's well run, and it's got a great portfolio of assets.
Hello everybody, and welcome to today's webinar with Medallion Metals. I'm Danica Warburton from Investability, and I'm delighted to be joined today by the Managing Director of Medallion Metals, Paul Bennett, who's going to run us through a bit of an update on the company and what they've been up to.
Thanks, Danica, for the introduction. Let me get this presentation up. So, just by way of background, Medallion is an advanced gold and copper explorer. We've got a portfolio of assets down in the southern goldfields of WA that have got great potential. We've grown the resources down there to 1.6 million ounces gold equivalent, and it's our ambition now to progress from explorer to developer and onto producer. I'm going to talk today about what the Medallion team's doing to make that ambition reality. So, junior gold equities, this is a tough, crowded space. We're competing for capital and attention with a host of other junior explorers. And I think these points, when taken together, are what set us apart from much of the competition. And first and foremost is that Medallion controls the majority of a greenstone belt in WA that's proven to be fertile for gold and for copper. These assets are increasingly rare. We think with continued investment and over time, this one will demonstrate itself to be extremely valuable. The location's outstanding. There's two major resource projects underway in the local government area that demonstrates you can permit, build and operate a mine in Ravensthorpe. We've got scale, we've got grade, 1.6 million ounces gold equivalent at 2.6 grams. That deposit is at surface. It's shallowly drilled. It's open in multiple directions. It can and it is being grown both in terms of its size and its confidence as we continue to invest in it. The asset's de-risked. We're on granted mining leases. We are clear from a heritage perspective. We've advanced the permit substantially. There is a PFS underway to demonstrate the technical and the commercial merits of the asset. We're active on the ground. We're focused on maximising dollars into the ground. We've drilled 54 kilometres since we got going in March of 2021. There's plenty more to come. It's all to grow that resource and advance the exploration targets. And all of that's being done with that strategic objective of achieving that critical mass of metal to build a mine. Now, internally, we think that's between 800 and 900,000 ounces on a gold equivalent basis in the mine plan. That then gives us the opportunity to target that 100,000 ounce per annum run rate over a minimum of 8 years. And we're very confident that Kundip will yield that critical mass, and then the regional, the near mine opportunity is just upside from there. Just touching on corporate, there is a capital raising underway at the moment. It'll settle in a week's time. I want to acknowledge the joint lead managers, Canaccord and Morgans, for assisting us getting that done in what is a tough market. But when the dust settles on that raising, there'll be 307 million shares out, and we'll have cash of just a touch over $4 million. We have an investment in our neighbours Nickel Search, and there is a loan from our major shareholder. It's only repayable in the case of a change of control event or if we make a decision to build the mine at Ravensthorpe. The market cap on a pro forma basis, and everything on this slide is on a pro forma basis. That capital raising closing is $21 million. If you adjust for the cash, the debt, the listed investment, it backs out an EV of roughly $20 million. And based on the existing resource, that's an EV per resource ounce of $12 an ounce. And I think that's a steal given the quality of those ounces. Here's a peer group of ASX listed explorers, principal asset being gold in WA at a pre-production stage. Now, we screen extremely well in terms of scale. We screen well in terms of grade. So on the face of it, we're located at the wrong end of this curve. Now, this situation's persisted for a period of time now. It's extremely frustrating, but there's no point in grizzling about it. All we can do is remain focused on growing and de-risking those ounces. And I think as we continue to demonstrate that this metal can be commercialised, then we begin to move to the left-hand side of this curve. Now, you don't have to believe me. There's two analysts that cover us at present, independent analysts. I'm sure their target's under review with the with the capital raising underway and some other things going on, but the consensus pricing would reverse out an EV per resource ounce of $70 an ounce, which would certainly locate us at the other end of this curve. Even if they're half right, it's apparent that Medallion represents pretty compelling value from a valuation point of view. Focusing in on the flagship asset, the Ravensthorpe Gold Project, Medallion's got the dominant landholding in the Phillips River mineral field, and critical to that are the tenements that straddle the Annabelle volcanics, which are mapped in yellow on this slide. These rocks have hosted all of the historic production. They are host to all of the known prospects, all of the known resources. They're also host to the pegmatites that Allchem are mining at Mount Catlin. Now, there's been approximately 130,000 ounces of gold and 20,000 tonnes of copper metal produced in this area over the journey. In today's prices, the gross metal value of that historic production is a rough 50-50 split between the gold and the copper. Now, we think that copper is going to have an increasingly important role to play in the Medallion story as we move forward, and we're certainly seeing that in the drilling at depth at Cundit. Now, it's at Cundit, which is located at the southern end of the field, where the Archean dips beneath the Proterozoic and continues on to the south. This is where the bulk of the activities occurred, the bulk of the drilling, the bulk of the expenditures taken place. And it's where the vast majority of the resource growth has come from, and it'll continue to be our focus in the short to medium term. We're focused on maximising dollars into the ground here. Of the 54 kilometres that we've drilled, roughly 49 kilometres of it has been at Cundit. And as you'll see as the presentation unfolds, if you invest in this asset, it will deliver. So focusing in on Cundit itself, Cundit mineralisation, the gold and copper mineralisation, and more generally across the Annabelle volcanics, is not typical of a WA gold deposit. And the most obvious difference is that there is a significant copper credit. We think the closest analogy is Silverlake's Deflector project, specifically as it relates to the mineralogy. Now, Deflector has been an outstanding success story, notwithstanding there was quite a bit of scepticism around that asset at the pre-production stage, but that was well and truly overcome, and it's now gone on to be a fantastic, low-cost, long-life operation, and that's the kind of outcome that we're seeking to replicate here at Ravensthorpe. But Cundit itself, it's a strongly mineralised, medium-grade gold and copper system that occurs in multiple orientations. The grade variability here is low. If you look at our historic announcements, you don't see bonanza gold grades, but what you do see is consistent grades and widths, 2, 3, 4, 5 metres at 5, 6, 7, 8 grams per tonne. Low coefficient of variations in the gold domains, minimal top cutting. We think that leads to a lower risk resource estimate and by extension, a lower risk mine plan. The deposits are shallowly drilled. Average depth of drilling here, 100 metres below surface. The deepest hole into the system, 370 metres. The system's still open at depth. The ounce per vertical metre profile here averages 4,000 to a depth of 300 metres below surface. Now, we've been adding metal both along strike and at depth. If we could achieve an ounce per vertical metre profile here of 5,000 to a depth of 500 metres, which is still shallow for an Archean gold lode system, then this area starts to get really interesting in terms of its scale and significance. There's also opportunities to find new lodes within this granted mining lease boundary. These lodes are projected to intersect at depth and also along strike in some cases. There are opportunities to identify new lodes beneath the remnant Proterozoic cover here, and we also know there's gold in the bounding tonalite. So all of these opportunities exist within a 1.5 kilometre radius of where you might locate a processing plant to treat the existing resources. This is a great address. It's got great potential. We think multi-million ounce potential with continued investment over time. That's a bit of the arm waving. What have we actually got on the books? We updated the resource here in January of this year. It was based on 44 kilometres of new drilling. The gold resource now stands at 1.3 million ounces. The silver's there roughly on a 1-to-1 ratio with the gold, and there's 59,000 tonnes of copper. So on a combined basis, 1.6 million ounces gold equivalent at 2.6 grams. We've over doubled the metal inventory of this resource since we got going in March of 2021. There's a high degree of confidence in the resource. 63% of it's in the indicated category. 3/4 of it is within 150 metres of surface, so potentially available for open pit mining. Pleasingly, the grades have held up, 1.8 grams gold in the pits, 4 grams gold in the underground gold domains, and a significant copper credit there as well. The gold's driving the economics of this project, the copper's enhancing it. We added 20 ounces for every metre drilled into that resource estimate, and every one of those ounces was found for a cost of approximately $15 an ounce on a gold equivalent basis. Now, that was a great business model when we were valued at $30 an ounce. Not so much anymore. You could find them for 15 and have them valued for 30. Not so attractive anymore. And that's one of the reasons why our focus has turned to de-risking these ounces that we've got in the ground, as opposed to finding more of them at this point in time. That's the quantity of the ounces. What about the quality of them? I had hoped to present some more details on some preliminary outcomes from the PFS, but unfortunately, it's been challenging to do that at the moment. But what you can see here is an overview of what the mine plan is beginning to look like. So as the PFS is advancing, we're seeing that mining study taking shape. As you can see, there's quite consistent mining shapes there. So we think we're going to have a high degree of conversion of that resource to the mine plan. And there's a significant portion of it that's in the oxide lithology as well. So that all of this bodes well for the all-in sustaining costs for the project as we get closer to completing that PFS. But those results, there's a lot of work to do here, but we're confident that we will report the final results this quarter in 2023. So the opportunity at Medallion is really starting to take shape now. The PFS is imminent. We're confident that's going to demonstrate a strong argument to continue to advance the Ravensthorpe Gold Project towards production, recognising there's a lot of work to do to get to that final investment decision, but the strong foundations are really in place there. We've got the extensions to the existing resources. That provides us, if we continue to invest in them, we're confident that provides us with optionality to both look at increasing the production rate of the project and then extending the mine life, or both. And then the near mine opportunity, the regional opportunity, potentially game-changing in that we're really just scratching the surface of the Cundit Mining Centre and then the Greenstone Belt more generally. So the Ravensthorpe Gold Project, it's really the focus of what we do. Then there's also the portfolio assets, not to be forgotten. We've got the investment in Nickel Search, our neighbours. That provides our shareholders with exposure to potential new nickel sulfide discoveries. We're quite enthusiastic about what the management team and the ground holding out there is capable of delivering. And then there's also the Jerta Cut-Up project, which is over half of our ground holding down in Ravensthorpe. It's an entire sedimentary basin that's proven to be fertile for SEDX deposits, as evidenced by Trilogy, and the JORC compliant resource there, which is at surface, is shown. So a significant accumulation of metal there. So multiple routes of value and that solid foundation to continue to look at returning Ravensthorpe to being a significant gold and copper production centre in WA. And I think if we can achieve that outcome, it'll be to the great benefit of our shareholders and to the local community. So to wrap this up, we think it's a compelling opportunity for investors who are looking for exposure to advanced gold and copper exploration in WA. The business is well run. It's attractively priced relative to its peers. We own assets with great potential in a great jurisdiction. The PFS is imminent. The resource, it continues to grow as we continue to invest in it. The near mine opportunity, it'll get tested in coming months. And then the regional opportunity, it's real, it's extensive. We may not test it in the short term while capital markets are tight, but it's certainly not going anywhere, and it represents tremendous upside. So with all of that said, I'll bring the presentation to an end and turn it over to questions.
So you mentioned that you have a high degree of conviction that the current resource will continue to grow in both size and confidence. James has asked, what underpins your confidence specifically?
Yeah, okay. There's a range of things, particularly at Cundit. We have, as we've drilled the 49 kilometres over the last 2 years, we've certainly seen that the ounce per vertical metre profile of the deposit has grown over that period of time. And there's almost a direct correlation between the data density and the ounce per vertical metre profile. So I mentioned that it averages 4,000. It actually peaks at 7,100 metres below surface, where the data density is at its greatest. So we're adding ounces along strike, we're adding ounces at depth. We're confident that we'll continue to do that. Now, that's a broad metric. There's also been a lot of diamond drilling done over that period. So over a third of those metres at the Cundit Mining Centre have been diamond, and that's let us see the ore body in the flesh to a greater extent than we have ever seen before. And that in turn's enabled a lot of structural work to be done. And what we're seeing is that the better parts of the ore body are related to the agglomerate rather than the felsic volcanics. And we're starting to build up quite a database of where they extend at depth and along strike and down plunge. So that's led to a step change improvement in our ability to target where the ore bodies are extending. So we're confident when that drilling gets done that we will continue to add to that resource.
Okay, and what exploration programs are currently underway to sort of add to your resources, and
nothing
in particular?
Nothing immediately, but we'll be undertaking an extensional drill program, both RC and diamond, at the project once we close this capital raising and get rigs organised and our team organised. And that'll principally be focusing on extensions to the existing resource. There may also be some small programs to infill some inferred as well to increase the confidence of the existing resource, but principally it'll be extensional work.
Okay, and I'll jump to one from Ian now. So he's actually asked, are there any potential heritage issues that may hinder the project advancing based on the new Heritage Act?
Yeah, that's an excellent question. Look, I do say that we're clear from a heritage perspective. I said that with a lot more confidence in the previous financial year. And things are changing and everybody's coming to grips with the new set of regulations. But we have got significant banks of historical surveys here, in particular at Cundit. So we're confident that they still are valid, and that we've also been through the heritage requirements as it relates to the process we went through the EPA approval. So we have a ministerial statement to go ahead and build the project as it was conceived in 2020. Now that permit will need to seek to be amended because the project's grown so much, the footprint's changed. But I think we're on pretty solid footing from the heritage point of view.
Okay. I've got one from Stephen. So thank you, Stephen, for your questions. He has asked, when do you expect the March 2022 Met survey will be updated? He had a bit of a question around the silver recovery, which seemed a bit low back in that March 22 survey.
Yeah,
speak to that.
Silver's a relatively minor contributor to the economics of the project. We think between 2 and 4% of the revenue is related to the silver. It is lower recovery than the gold. But if you look at that announcement from 2022, you see that the silver basically goes with the gold in the flotation on a one-to-one basis. But it's when it gets into the leach plant that the recoveries drop off. And that's, I won't get into the technical weeds too much, but that's principally related to carbon absorption efficiency. I'm a mining engineer, so I should be careful about what I'm talking about in relation to that. But my understanding is that that's the principal reason, is that carbon absorption efficiency is down around 80%. And that's typical of most gold projects in WA that have got silver with them. And that's the reason that you see those lower silver recoveries. But in terms of updating met work, there has been no additional met work done since 2018. But in the upcoming programs, we'd look to collect some more met sample, because the mine plan's grown so much that the historical met testing, or the samples from the met work, are no longer representative of spatially representative of where the mine plan is now. So we do have to do some more work.
Yeah, because there seems to be a bit of a perception that processing is perhaps hard at Ravensthorpe. Is that?
Yeah. Look, that's always one of the knocks on the project that we confront continuously. And again, I referenced Deflector earlier on. Obviously, that we think there's a strong analogy in terms of the mineralogy there. And this is a really quite a technical area, and I'm happy to talk to anybody offline if they want to contact us directly and have this discussion. But in simple terms, the copper above the top of fresh rock is a drag on project economics. Below the top of fresh rock, it's an enhancement to it. But there's numerous examples of how this issue is managed. We're certainly aware of it. It's a focus of the pre-feasibility study, and it will be on an ongoing basis. But we don't think it's a recovery issue. The challenge is to take as much copper out of the system before it gets to the leach plant, and then ensure that there's enough cyanide there to keep that reaction going and maintain the high gold recoveries.
Mm-hmm. And Silverlake seems to have done a pretty good job at Deflector.
There's other projects in WA at the moment that are treating oxide copper stockpiles and successfully. So it's certainly manageable. Yeah.
And Stephen's asked a sort of a question in that same vein. So I think we answered Stephen, but I can definitely send you an email afterwards if you've got any further questions. So moving along, here's one from Sam. It's on the valuation relative to your ASX and WA gold peers. I saw you had the slide in this preso. He asked, what do you think is holding back the share price and liquidity, given that the valuation seems so compelling?
So liquidity, I think the stock's very tightly held. So pre-IPO shareholders own roughly 55% or something like that. Once the dust settles on this capital raising, and then take it out to the top 20, and we're out to 75 to 80%. So it's tightly held. That's worked against us thus far. I think it has the potential to work for us in the right circumstances. Gold sentiment is generally tough, and it's perhaps that's one of the key reasons that it holds us back, I think, at the moment.
Well, I was going to ask you actually, in your discussions with institutional investors, have they mentioned their view on the sort of the market for gold and copper equities into 2024 and beyond?
Yeah, generally it's positive. They say the macro settings are generally positive for gold, and I tend to agree. But they're all also sitting there and saying, why hasn't it happened yet? So obviously inflation is pretty sticky, and reserve banks seem to be remaining quite hawkish. So I think that's probably a challenge in the short term, but ultimately the macro settings are quite positive. So yeah, we're just waiting.
Yeah, it's all cyclical, isn't it? So you could be perfectly timing this next gold bull run.
Yeah, I think that's another element of, when we get this pre-feasibility study done, those ounces will be significantly de-risked. We've got high conversion rates. And I think that, and the other elements of the project, its location, the advancement through the permitting processes and other things, puts us in a really strong position to catch that sentiment when it does rebound. There's a lot of work done here, and we're advancing down that de-risking profile quickly. Yeah.
And you mentioned the capital raise at the moment, so that's going to set you up with funding to execute on these plans. When does that close, and can you provide some further details on that?
Closes on Thursday, I understand, and then it'll settle on Wednesday next week on the 8th, and then that'll be done and dusted for now.
Okay, brilliant. So we're almost out of time. There's a couple of quick questions on upcoming catalysts, which is what everyone wants to know about. I guess one of the big ones is the pre-feasibility study that's coming out in a month or two. What outcomes are you hoping for out of the study?
Yeah, the PFS is the key one, major de-risking milestone. It does a couple of things. It tells us the size of the economic prize at Cundit, and then it outlines, it will outline for us what we need to do to take it to final investment decision, DFS, and those sorts of outcomes. So that's important. It also gives us parameters that we can go back and re-engage with regulators with, and then seek to amend those primary approvals. And then I'm confident that with that pathway mapped out to production, then that also enables us to look at other forms of capital to potentially fund the business from this point onwards, in addition to public capital markets. there's other ways that I think with that pathway mapped out that we can fund our way through to final investment decision.
Okay, brilliant. And what other catalysts do you have coming up? I know that you're off to Diggers this week, and so everyone will be able to watch a presentation for you there with good news, hopefully.
Picking up and presenting in front of the Diggers crowd is going to have too much of an influence, but fingers crossed. But the PFS is the key one, and then we will mobilise the drill rigs again, and those results will start to flow. So hopefully the combination of those two things gets things moving.
Yeah, absolutely. Okay, well, are there any final parting words that you want to leave your shareholders and investors with today, Paul?
Well, I want to thank everyone that's supported us through the most recent rights issue. The support's there has been really strong, but the key things to note here are that we are about to cross a major de-risking milestone for the business. The business is attractively priced relative to its peers, and it's well run, and it's got a great portfolio of assets. So I'll just leave that everyone with those parting words, and yeah, stick with us.
Thanks very much, Paul, for the very insightful presentation and Q&A, and thanks to everyone who took the time to join today's webinar. And we'll get back to anyone whose questions remain unanswered.